Good afternoon, everyone. Welcome to the Daily Market Update Show. And today we have a lot to talk about. Will the market continue to go up? Is what the question that we got to be asking ourselves. And so today's CPI came in slightly better than expected. So expected was 3.1%, and CPI came in at 3%. And that's a good sign for the markets. And that was the bullish reaction during pre-market today, as well as the Canadian Bank raised 25 basis points today for their rate hike. And this will likely be their last rate hike, as well as the Fed is going to be raising in their hike on the 26th. So that's likely the most last rate hike as well, even though they say they're going to be 2 hikes. You can see the probability of the second hike slightly decreased today due to probably the CPI coming in slightly better than expected. So we have PPI data tomorrow, and we'll be watching for that too. Usually CPI comes in good, PPI will be coming in decent as well. Won't be too big of a discrepancy there. All right, so today we can see money is still rotating in the market, and there is no red flags yet. And as I keep saying, repeating myself for quite a while, it's a couple weeks, months, that as long as the trends in the market continue to go up, we don't want to fight the uptrend, even though we feel like the market is very extended, but still, we want to take the emotions out of our trades and ignore the macro. We don't want to ignore the macro, but we have the macro in the back of our head because the economy is not the stock market. So as long as the trend, weekly, monthly, daily, hourly uptrend is all in favor of the bulls, we don't want to fight it. We just want to be adding on these dips. So I'll be breaking down these charts in a second. We'll be doing QQQ, SPY, Nvidia, Tesla, Apple, Amazon, Google, and Microsoft, and Meta. And I'll be talking a little bit about the plays that I made last week. And there's this video on the 3x leverage ETF on how to make $400 with 3x leverage ETF. I did over the weekend. Make sure to check that video out. I'll put the YouTube card above me. That will just pop up or at the end of the video. And I'll also be talking about it again with what I got in here. And let's get started. So QQQ, I was looking at this wedge as our visual guide, and to see which way we break out, we'll be breaking out, and we end up breaking out bullish because of the CPI data. And I talked about it for the last 4 days, where you can see all of this dip just kept on being bought up over and over. And it felt like when we closed on Friday, it felt like that was the temporary top due to the size of the pullback and the speed of the pullback, as well as when Monday opened, we were actually also selling off quite quickly. As you can see on the hourly chart, on that Friday, it was just this last hour sold off real quick, and Monday it continued. But the thing that made me cautious about playing bearish was this was a hourly downtrend confirmed with absolute zero follow through. So when this happens, especially on the same hour candle where you break through it and you come back right away, that just means there's no more bears that wanted to short down here, or potentially anybody selling, and there's just more demand. And we come back up to 364 support, and then we tried it again here. Did even test 364, and bulls keep buying the dip. We made a higher low each time we bounce, meaning the low is higher than the previous pivot low. Same thing as right here. This pivot low is higher than this pivot low, meaning bulls want to buy every time it's higher, meaning this demand is still strong. And essentially what we got today, new bullish action. And keep saying this, let's keep following the trend. So as long as it stays strong, we will just keep on playing the bull side. Obviously, we don't want to be buying when like up here, right? That's not the last thing we want to do after it shot up for a while, for like 5 days straight, right? So we, as a bull, we want to be buying on the dips and playing with the trend until I see some actual weakness from the market. I will not be shorting the market unless it's just a day trade. If you're day trading, of course, you can short the market, get in, get out, set that stop loss. But for a swing, not at the moment, because there is still zero signs of weakness in the market. As long as even the shortest time frame in the hourly is not in favor of the bears, nothing is going to happen in the daily time frame, in the longer time frame. So we just have to keep on going with the trend. And I know the macro seems very, very bearish overall, and it's that's usually when it's the best time to accumulate your long-term positions, especially when the macro is really bad. But so now we don't want to put the macro and the stock market together. We just want to just look at the price action, and that's all it matters. So if the price action starts to show us bearishness, then we will switch to swinging bearish positions. As of now, no signs of that yet. So hourly uptrend will be you guys' guide in a very short term. As long as the hourly uptrend is intact, there is nothing is going to happen on the longer term time frame, especially the daily. So the first sign that we want to see from the bears is they need to confirm hourly downtrend, something like this, but with follow through. So over here, when it broke, right, the hourly downtrend confirming for the bears, this was where when bulls bounce, bears should have played defense right there and continue the action downwards. When they couldn't do that, when we shot straight back up, that was a sign telling us there is no bears around this area. And for bulls to continue, especially we get that on the upside. It's very similar. Let's say we continue uptrend, right? We break out, and then we come straight back to it. Something like this. Then just showing that there is lack of buyers that day during that level, and then we can come back to the other side. So that's how usually market feel of where this, if there's any bearishness or bullishness in that area after a support resistance breaks. And you can see follow through in one way, we go the other way. It's very simple. And all right, let's take a look at SPY. Very similar, and you can see SPY as well kept on bouncing that 12 EMA, just like QQQ on the daily chart. You can see all this dip buying up from the 12 EMA, and it broke out today as well with the CPI. Just like you can see, all these sectors are rotating around, increasing in breadth. That is good for the market because for the past couple months when it was running, it was mostly just the 7 big tech stocks. Now we're having other sectors catching up. So that's a good sign for the bulls. So let's take a look at, so every trend is still in favor of the bulls in terms of the longer time frame. The weekly, the daily, you can see is still in an uptrend. And so we zoom into the hourly to see if there's any cracks in the market at the moment. At the moment, no, because this was a big drop and this is the bounce. If bears were able to take this, break this prior pivot, that would have been a hourly downtrend confirming. And I would be like, okay, bears first step is showing up, and let's see if they can continue or not, right? Just like that QQQ hourly downtrend with no follow through. We want to see bears following through. But we bounced. We didn't even break this prior pivot, so that's not an hourly downtrend confirmed yet. Obviously, tomorrow if we roll over, then it will confirm. But at the moment, none of that has confirmed yet. So we're still in favor of the bulls at the moment, even in the shorter, very short time frame. So if the hourly time frame is still in favor of the bulls, nothing is going to happen on the larger time frame charts. So that's going to be our guide. So where's the next resistance that we'll be looking at if SPY continues? Let's take a look back here. For me, it'll likely be heading up to roughly around this 450 zone. 450 would be the next strong resistance. Obviously, we're not going to just shoot straight up, but I mean, we could. It's 0.88%. But yeah, it would be the next strong resistance. And because we are at 450 level, is testing the low of this structure. See, the low of this structure, as well as the high of the last structure. That's going to be a strong resistance zone. And if we do break it up above that, we're likely heading up to this 454 level. And for you bears, confirm that hourly downturn for me, then I would start to zoom out to the 4 hours and see if you guys get any follow through. As of now, no signs of that yet. And if I do see that, then I will let you guys know. And yeah, for you long-term holders, just ride that EMA, just like that two-day EMA 12 on Apple, just continue to ride it. There is just no signs yet for you guys to take your profits on a lot of those big tech stocks at the moment. But all right, let's take a look at the big tech stocks. Nvidia bull break. I was talking about this for the last couple of trading days that it's just indecision back here. You can see this all this indecision. Bull break, lack follow through, bear break, lack follow through, just dropping indecision. And today we broke out of that tightening wedge, and we're now testing all-time highs. That is how you usually trade the tightening range. Big move up, big move down. The moves are also within the prior move, right? You can see all these moves are within the prior move. And when it breaks out, that's when you play this stock. You'll be adding of this prior pivot candle. Add, set your stop loss below it, and let it ride to the next resistance. We pretty much hit exactly below we close in the high of the day. So there's a good chance that we potentially would test it again tomorrow. Okay, so let's see where it's on the 5 minutes. Yep, we pretty much close at the high of the day and broke above it on the after hours. So tomorrow we might be in all-time highs again for Nvidia, which is incredible after how much it has run. I was expecting a bearish break, to be honest, but so like I said, take the emotions out of the market, because what you expect won't always happen. Because if I was expecting a bearish trade and I added bearishness right here, right, I shorted here, and I would have gone stop out right away. But if I just waited for it to break, maybe I'll miss like 0.5%, right? But the likelihood of it continuing is very high. So I'll say I waited today and it gapped up above this yesterday's candle. Then I added, would have missed, let's say if I added yesterday versus when it gapped up, I would have missed close to 1%. So I missed 1%, but I know that my trade will work out a lot more probable than, let's say I added in here, because I wouldn't know which way it's going to break. Then I still make 2%, and with a lot less stress instead of getting chopped around for 2 weeks versus I get in today, I get out at the end of the day, and 2% right there, right? Or let's say it broke bearish. We had a gap down. I might have missed 1% as well, but I was short here, and then it will continue after that bearish break, just like the other side. While we wait for breakouts. Pending range. As of now, where would the next resistance be for Nvidia? There is no resistance other than this all-time high, because there's no price above the all-time high, and we are slightly above it on the all-time high. We may peak above a little bit and then break below. Then that would be slightly a little bit of a red flag initially, but as now it's after hours, so there's no volume at the moment, so we won't be too worried about it until tomorrow to see if actually it will have a clear breakout or a rejection. If it does reject, we'll come down here to 420 again to retest that support. Tesla is still chopping with this range, still above the 12 EMA, so no huge red flags yet. But this is a big enough drop where the next bounce can potentially shape up its daily downtrend, so we got to be cautious of that. Unless it holds above the 12 EMA, and it is still intact on the uptrend. So as long as we hold above this pivot, so this is the pivot now set because we bounced here. So Tesla bulls needs to hold yesterday's Monday's low. So that would be 265.1. That's the new pivot here. This was the prior pivot, and this is now the new pivot set for the daily uptrend. So this bounce, if we reject from this prior resistance where we rejected here once already, rejected from there, which we did a little bit for today, come down even more, break that prior pivot, that's a daily downtrend confirmed for Tesla. Then that would be a notable shift for me because Tesla has a daily downtrend since back here. So it's been a while, since April. It's been 3 months since Tesla has a daily downtrend confirming. So yeah, so that'll be a little bit of notable shift for me. So that shift would probably fill this gap if that happens, really downtrend, and we will probably form something, a tightening range around this area. Take one set at a time. So we zoom into the hourly to see if there's any red flags yet. Bears are getting really close. You can see Tesla is weaker than QQQ today. End of the day, Tesla almost broke that pivot. If it breaks tomorrow, that's an hourly downtrend confirmed. If you have an hourly downtrend confirming, chances of it that's confirming breaking the prior pivot low increases. So, you short-term traders, probably set your stop loss under this pivot, this today's pivot low, 271.46. Because of that breaks, that's an hourly downtrend confirming. And bulls, same thing. You don't want to break that pivot. You want to negate it, bounce off of it again, and come back and break above this 275. Right? See how Apple is a little bit weaker for the last couple of days, but it is still holding the 12 EMA. Remember I talk about that. If we do break the 1 day 12 EMA, we're going to go to the 2 day 12 EMA, and we bounce off of it exactly again yesterday. You can see right pretty much there. And we have bounced off of this 6 times probably. As I can remember, 1, 2, 3, 4, 5. And there's more down here. 6. And bouncing off of this for months. And that's what I said. Very likely the first time we're testing it, it's going to bounce because we haven't tested it since May 24th. So longer we don't test it, when we test it again, it's going to be bounced because this is how the psychology of it works. Everybody sees that it's been bouncing on this 12 EMA for months, right? Prior to this one, we have seen it 6 times. So everyone is like, okay, the next time it touches there, I'm going to buy it because there's so much FOMO going on. It's like, oh my gosh, I want to buy it. When is it going to touch the 12 EMA? It just kept on going up over and over. And it's like, oh, finally touches it, let's buy. So there'll be always a little bounce regardless. Let's say if this is the temporary top, it will still bounce a little bit here, even though if it's then it's a temporary top, obviously this will form a PLE downtrend. But as of now, it's still holding above it. So we used up that buying power here now once already. So let's say when we come down here, there's going to be less buyers now if we retouch that 12 EMA, especially if it's so close to each other, right? Because it's just only been a couple of days since we touched this. So ammo has used up a little bit here. And say we come down here Friday, and the chances of it breaking will be higher than all these times back here, because every time we bounce off of it, it's always there's always gaps between days for people to want to get back in. And let's see, the hourly trend is still in favor of the bulls, even though we had a bear break here, but that was lacking follow through. So this level, you see there was a lot of strong resistance back here, like a strong support when we touched it right here. Much call it a triple bottom over here. 87. So as long as the bulls hold above the 12 EMA on the 2-day and above 187, there's 0 red flags for the bulls. All right, let's take a look at Amazon. All right, Amazon. I'm going to go a little bit faster because we still got to talk about the Chinese sector of the plays that I'm currently in. We still got Amazon, Google, Microsoft, and Meta. Microsoft, not much to talk about. Same thing, chop zone. And see, this chop zone, we have tested it. Today is the 7th time, but it looks like it's going to break soon because what happens when we have a bear break lacking follow through? Go the other direction. See, this was the zone. This zone was the prior resistance, and when we were above it, we bounce as support because price is above it. So when we broke through it, we were supposed to test this bottom of this prior chop zone, but we didn't even get over there. And bulls actually played defense, bought the dip, came back up. That's a red flag for bears. So that's when you would probably cover your shorts, especially when you had this breakout on the downside and lack follow through. You see the bounce and wait, Same thing as Nvidia. When Nvidia is tightening up, you don't want to play it until it breaks the direction that you want it to go. So right now, we are testing this top again. I wouldn't add until let's say we break out, and then we retest, bounce. You add right there. That would be the most ideal scenario. Obviously, it doesn't always retest. Sometimes it just goes straight up and then just chops around and back up here. Ideal scenario would be a breakout, retest, bounce, and then you add. Let's see if it does that or not. It's getting pretty close, and also closed higher on the top of its range. So when you look at this, all these wicks, we retested it, but we always closed lower range of the wick. But this time, when we tested it, it held decent enough, and we closed near that resistance. That means tomorrow or Friday, there's a good chance we will retest it again, versus something like this. We tested and close all the way back down here. That's a rejection. This we test it tomorrow again. Let's see on the hourly chart. Yep, you can see we tested here, closed near that resistance on the high of the day, meaning that's a good sign for the bulls. So likely we'll retest it again. Eventually, probably the breakout if you have another green day. Let's say PPI comes in slightly better than expected or just expected, right? Market probably just continues and go higher. Hourly trend is our guide. Hourly uptrend continues. Right, Google. Google is still the weakest of all techs. Yeah, still very weak. Still rejection from 12 EMA. You can see right here, rejection again, rejection again, rejection again, rejection here. So 12 EMA on the downside would be Google's guide. Google is in a daily downtrend at the moment because that was the pivot, that was the downtrend. And if Google can break above last Friday's high, this 121.5, then they would negate the downtrend. It would become a neutral trend. Then that bounce would be big enough bounce where they can potentially shape up the daily uptrend. As of now, no signs of that yet. You can see Google closed the lower end of its day. So that's not a good sign versus Amazon where it closed on the higher end of its day. But that doesn't mean it's game over for Google yet because Google is still in a hourly uptrend. Just that this drop was quite notable. Just here, out tomorrow, exactly tomorrow. So that wherever this breaks, it's the direction of where Google wants to go. Because if market just weakens in a little bit, Google's just going to drop over because market is this strong today, and you can see Google only bounced a little bit and closed lower range of its day. Then that's a little bit of a red flag. But if we have one more day, maybe green day, Google may start to shape up a better structure for the trend change back to its favor. Right, Microsoft similar, close at the lower end of its range, still in this chop zone, this zone, and this zone. This was also a bear break, lacking follow through like Google. Like Amazon. We had that, and then retested again. Hence the bounce today. So now I wouldn't be playing Microsoft either because it's just in a chop zone for QQQ. Let's take a look in hourly to see if there's anything we can see. It's very similar chart for most of the tech. Big move up and then drop and then consolidate into that tightening range where it will break tomorrow. Well, wherever the side breaks tomorrow will give us more clues where it wants to go. So when we have such a big move up and we drop here, this is where you can possibly add for like a day trade. Because this was a prior strong support. You'll see all these levels rejecting from it, bouncing off it at this 335 level. And just like your stop loss below it. Take profit here. Let's take a look at Meta. Meta, the strongest of the tech stocks so far. And you can see how beautifully trending on this 12 EMA it's been trending. And this is the 1 day, not the day like Apple. So clear breakout, chop zone right here, very clear chop zone. Nobody's getting a fake out here because it's very obvious where it's bouncing, where it's rejecting from. Broke out of that. Remember when I talk about that retest that you want to see? So that right here on Monday was the retest. Breakout, retest, bulls buy the dip. That's when you add. Then you can go out for the next move. On yesterday, we actually closed on the higher end of that resistance. Okay, broke out of that resistance right there. See that quadruple top, and we get a next move. So very clear trade. That 300 psychological level once it broke. You can see today's move. So there's no real fake out on Meta or anything. You can say it's overextended, and you want to short it. It makes sense. It is overextended, but overextended can always stay overextended, especially on these big cap mega tech stocks where people would just add them and just put them in portfolio and never look at them again. Or now we are in a phase where it's also FOMOing. So you will get a lot of emotional buying going into the market. So we want to fight it until we see a trend change in the market or any kind of weakness in the market. As of now, still no signs of weakness in the market. So I will continue play bullish and buy dips and for short swing trade or day trades, up to you guys. So yeah, let's take a look at sector I was talking about. So this is Chinese sector, and I was talking about it on Sunday. So that would be last week. So we're right here. Down here, that's we have a wedge here. So laggard playing. This idea of this is playing a laggard bull, meaning the Chinese sector has not run yet, but the US market has run yet. So we're playing laggard bull moves. So we want the sectors that hasn't run yet to play catch up bullishness to the ones that already ran. So that's what we're getting lately. We are seeing growth stocks running up. Small caps are on fire for the past couple of weeks. That means they're playing laggard bulls now. So essentially, the idea of it here is we want to see a weekly trend change. So this is a big enough bounce, and this drop now sets the weekly pivot now here. So if I'm wrong, that means I'll get stop out on that weekly pivot right there. Right, then we will up and confirm the weekly uptrend. We need to break out this weekly candle right there on the 29.25. So that is the first target, 29.25. And if it breaks, we will likely head up higher to this zone. And next target would be this black looking wedge, the bigger one. And so that would be, let's see, quite a bit away, 13%. And I'm playing the leverage 3x ETF of this ETF. So that means we don't want to try the 3x leverage, but we just want to look at the price when we add. So that would be 12%, 13% times by 3. That's close to the wedge is roughly over here. So we'll be looking at roughly 40% on the upside. And that weekly top, if we get that first target, be 15% still. I'm already up like 10% from last week's ad. Due to today, we are up 3% in the Hang Seng Index. So see this move today, just already up 9%. Yeah, let's check out that 3x leverage ETF video that I talked about on Sunday, the one that says $500 a day trading 3x leverage ETFs. And I'll give you guys a better understanding of the 3x leverage ETFs, and that will help you guys trade it. And as well as I talked about my entry of YINN, YINN on Sunday. I think I added close to last week, Friday. Yeah, so be this candle right here. And like I said, we want to chart FXI when we play in, because this is the 1x. And we'll see if we get any lagger bold moves, and because it's quite, the risk reward is pretty decent. This is pretty much the all-time low on October last year. And potentially We get this weekly inverse head and shoulders. Also looks better on the monthly. Try right here. This is the left shoulder. This is the head, and this is potentially shaping up the right inverse head and shoulders. Inverse head and shoulder just means a downtrend changing into a uptrend. If we get a monthly uptrend on this thing, then that's a very, very good sign. But as of now, we need to change the weekly first. So it needs to break this pivot first. This Monday's, this 29. All right, if you guys have any questions, feel free to comment below. And if you just subscribe, if you guys made it this far or learn anything, and likes, shares, and subscribes are always appreciated. And I will see you guys tomorrow for market update, and hopefully CPI will come in good for everyone. And have a great rest of you guys' day.